Hello, everyone. I'm Harry Stahl from FIS Capital Markets Strategy Team, and I'm really happy to be here for this conversation about digital operational resilience today. I'm very happy to have Matthew Hammer from EY and my colleague John Peasy to talk through this topic. Gents, why don't you introduce yourselves and then we can frame out sort of what we're looking at here.
Sure, thanks, Harry. So Matt Hammer, I'm a partner at EY based out of New York, and I have the pleasure of leading our operational resilience offering across financial services. So that includes assisting banks, broker-dealers, insurers, asset managers, fintechs, et cetera, with this complex topic that we're calling operational resilience and their path going forward there. So looking forward to the discussion.
Glad you could be here. John?
Harry, thanks for having me. I'm John Peasy. I've been with FIS for nearly 20 years, and I look after our innovation and strategic partnerships, which includes all of our cloud relationships with folks like Microsoft and Amazon and Snowflake, which I think are relevant to the conversation we're going to have today. So glad to be here.
Extremely relevant. Yes, thanks, John. When we talk about digital operational resilience, I mean, clearly we're talking about digital transformation all the time, right? How can we get the benefit from digital transformation, bringing things together, changing how we do business, how customers experience what we do. But the flip side of that is we need to keep the operations working, and resilience is even more important today than in this complicated technology world than it has been in the past. So there's a lot of focus on that from our customers and from regulators. And the example that we're going to talk through in some detail here is DORA. The European Union has created a Digital Operational Resilience Act. DORA is much easier to say, focusing on this area. And the central concept there is information and communications technology and the risks related to that, right? Talk about digital transformation. Those are the technologies that are involved. And so that's what we're looking at. DORA lays it out in five kind of useful pillars. One is, so information and communications technology, let's shorten that to ICT. That's generally how it goes. So ICT risk management is one pillar. Just thinking about these things as a set of risks. ICT-related incident reporting is the second pillar. That is, if you've got an operation running, you need to keep track and communicate to all of the stakeholders what's going on. I think, Matt, you have some things to say about that later. Digital operational resilience testing and oversight of critical ICT third-party providers. John, you're in the conversation for that. This is very relevant in this multi-vendor technology world that we live in. And then there's an information sharing pillar. So DORA says you need to think about all these things, and in particular, they impose very clear guidelines on critical ICT providers. So what is the definition of critical in this case? These are providers that are going to have systemic impact on the provision of financial services, or they are systemic in the character of what they do. Like if they're in the middle of a trading hub, that's systemically impactful. What is the reliance of financial services entities on the provider? And is there any substitutability, right? So the definition of what is critical is fairly pragmatic, but the EU is going to define that, and they're going to actually let the supervisory authorities of the EU do that. Make that call. The European Banking Authority, the European Securities and Markets Authority, so EBA and ESMA, and then the European Insurance and Occupational Pensions Authority. So for various parts of the industry, the regulatory bodies are going to say these guys are critical and are absolutely subject to these very crisp guidelines. So there is a question as this rolls out. I mean, detailed technical guidelines coming during the summer, and then implementing, going into next year. So who's going to be deemed critical? John, AWS and Microsoft are both assuming that they will be deemed critical. I think as FIS, given our position in the market, we may or may not be formally deemed critical, but we are taking the stance that we should think about the problem from that perspective. But before we go down that road too far, Matt, maybe we should turn to you and get a sense of like, how does the operational resilience, this digital operational resilience, fit into the context of your broader consulting practice these days? How's that evolving?
Sure. Thanks, Harry. I think to take a step back, because in my view, DORA, the Digital Operational Resilience Act, is really kind of just one of the regulations for this entire operational resilience kind of focus from both the regulators as well as customers. And so we at EY approach resilience in a broad perspective as helping our clients be prepared for and able to respond to bad things happening, bluntly. Whether it's an operational event, an external event like weather, a cyber attack, a terrorist attack, or something financial like a liquidity event that might happen either in the market or idiosyncratically. We like to think of that across those scenarios in a crisis continuum. So ranging from business as usual on the far left through to minor incidents, more severe incidents that might happen across those scenarios that I mentioned earlier, through to actually recovery and resolution scenarios that are required from the U.S. Dodd-Frank Act for the larger and now mid-tier banks as well, what they would do in those extreme events, kind of to the far right of the continuum. And that means for us to support our clients, it's a cross-section of our teams at EY across business, technology, cyber, risk, as well as third-party expertise. And we have a dedicated team across these disciplines that help our clients with this really challenging topic.
That makes good sense, because it's a bigger picture. The digital operational piece is clearly woven into all of it going forward. You mentioned that, of course, there are different jurisdictions and regulatory frameworks. What's the sort of difference of degree or focus between EU, US, and other parts of the world?
So broadly, global regulators are committed to doing their part for financial services firms and their third parties to increase their operational resilience capabilities, whether it's the UK regulators or just primarily, the US regulators, that is primarily through examination, or the UK or EU, which is mostly through formal regulation, or APAC, where we see a mix between guidance as well as regulation. All of the regulators are marching down a similar path in terms of the outreach. You mentioned kind of some of the definitions around critical third parties regarding DORA. That regulation is taking it the furthest in terms of the scope and span around what the expectations are regarding regulatory scrutiny in the operational resilience space. One thing I do want to mention, though, that I think is important for FIS as well as firms like yourselves that are in the market is outside of the regulatory scrutiny, operational resilience can be seen as a competitive advantage. No firm wants to be front page news right now as having a disruption, or worse, a poorly managed disruption. There's a lot to be said for a firm that can be, quote, always available to their clients. And when in severe scenarios, when disruptions do occur, they're handled with smooth communication, controls, and returning to BAU. And so right now, this regulatory aspect of DORA that we're talking about is one concept. However, there's also an opportunity in the market for third parties to think about this from a competitive advantage standpoint, firms like FIS. You can help your clients comply with the regulatory agenda. However, you could also be the firm that steps ahead and is able to have that competitive advantage as we are taking the step forward regarding operational resilience as important for you as our customers, as well as important for the end customers for the financial services institutions.
Yeah, Matt, I really like that point. I mean, we see it all the time, and we're a big player in our on our own, but we put together multiple solutions. And one of the ways in which we can make success for our customers is if we look at the whole operational flow across everything to make sure that they know that it's going to succeed and they can see how it works. So that's been there in terms of how we're designing what we do and how we sell what we do and how we make customers happy for a while. Now it's just coming to a very fine point in terms of these kinds of risks and these kinds of frameworks. And John, I know we'll talk more with you a little bit later, but that must resonate for you when you think about the technology partners.
Oh no, it absolutely does. I think Matthew really nailed it, right, in terms of two things. One, we're not in this alone, right? We're in this with our whole supply chain, right? And
Yeah.
you have to think about these partners as part of your own organization, right? They've got to be part of your process. You've got to have a level of transparency with them that's the same as you would internally, right? Because that's how you build products and take them to market in a way that they're constructed properly, right? It's how you deploy them and you manage them together in ways that are responsible. And then most importantly, I think when something goes wrong, you've got that level of coordination, right? You've got that preparedness in that you've done all the necessary things up front, right? You've done the testing, you've done all the simulations, right? You've run through the risk scenarios. You do that with rigor. You know who to call, right, when things get bad. But more importantly, you've got those processes and procedures in place, so it's not a fire drill, right? It's something that you prepared for, so that when there is an issue, and hopefully there isn't, you're in the best position to respond quickly, right, swiftly, completely, and get back to normal, right, which is what your customers demand and what their customers demand. So I think that's the big piece.
That makes perfect sense. I mean, when you think about it from your perspective, from the practice, Matt, I mean, do you have sort of a framework or playbook that synthesizes that view? That, like, how do you is the a playbook for operational resilience is probably oversimplified, but it's sort of, maybe there's a way in which you crystallize that as you have the conversation.
Of course, we've got a framework and playbook for addressing it based on really our experience of working with firms across the market, as this is I'll call it a journey that all firms are on right now regarding operational resilience, given the changing world we live in regarding how do you prepare for kind of severe yet plausible scenarios. That definition has rapidly changed, really starting in 2020 through to now, and the kind of realm of what is plausible has really expanded. And so that framework and playbook really includes alignment and integration across lines of business, technology, risk, cyber, third party, all to play their part across those scenarios that I mentioned earlier regarding the crisis continuum. And from a technology standpoint, where I think this is incredibly important, it's understanding what levers you can pull when thinking through your technology that helps you prioritize availability, recoverability, as well as flexibility or scalability once you're leaning into cloud as well.
You talk about the world having changed. I mean, pandemic and geopolitical risk and technology moving at just lightning speed, all those things combined. We've been thinking about operational resilience for a while. When you think about past practice and what's going to be required for firms to succeed going forward, are there some obvious changes that folks should be thinking about?
So I think it goes back to exactly what you were just mentioning, Harry, regarding the change in expectations and scenarios that are out there. We talked about the different events that could happen now that people haven't thought about, but also customer expectations have changed, whether that's your end customer as someone utilizing a financial services firm for access to cash or to make a trade, or it's your clients that are utilizing your technology for their business process. There is an expectation of being always available. That is a pure customer expectation that has emerged. And so everyone needs to really understand that. And you talked about technology change, innovation. We couldn't have a conversation without mentioning the term AI as that comes to fruition, and understanding how that's going to play a part as you're providing a service that might utilize AI. How does that going to change your risk profile as a third party, or if AI is being utilized by one of your third parties, how does that change the risk profile, and how do you assess that and manage that as well?
Yep,
and so
absolutely.
With those changing kind of parameters that are out there, I think the most important thing and the approach that we recommend and see firms doing is what we like to call a pivot to critical services, where historically firms have taken a more siloed approach where you've got your disaster recovery plans for your technology, you have business continuity plans for various processes that are out there, you have crisis and incident response plans for specific scenarios, you have your third-party contracts. They all represent different aspects of some of these scenarios that we talk about, and different aspects of what the impact is on your customers. Customers defined in those different ways that I talked about earlier, but they might not be linked. And why does that linkage matter is when those complex scenarios happen, you need to be able to have that smooth response that we talked about a little bit earlier, and having that understanding of if one piece of technology goes down, how does that impact my processes? What's my end customer impact, et cetera? So it's bringing those plans and preparedness together in a end-to-end service view and really managing resilience from that perspective. And that's hard. That's a change in mindset. That's a change in governance and policy and procedure. It's truly working at an enterprise level across the organization, which has not always been done historically. And so it's that pivot to critical services is one that's difficult, but we're seeing firms on their journeys to do, just given the criticality of this topic.
That's really nice. So the heuristic of critical services brings together all the pieces, including the technology and the operations. Clearly, as I said before, we're dealing with that in reality on a day-to-day basis as we, help our customers operate very complex parts of their business with our technology. But to put that kind of frame on it and say, when you're getting the benefits of all these changes, which are tremendous, you also need to think about the resilience and the risk and manage that appropriately. So, as I said before, when we think about this, whether the EU deems us as a critical ICT provider or not, we're taking that role seriously. The concerns show up in multiple places with third parties and internally. And, we start as FIS, of course, with a really strong foundation of policy and infrastructure and services around this. So the base is very much there. But as we look at DORA, we've launched a central initiative to think about really coherently, globally, what that implies for us, and to plan any additional enhancements we want to make to our services and technology to meet those requirements by the deadline. And John, when we think about how we go to market and how we deploy, your relationships with the cloud providers are clearly critical because it's a massive piece of what we do. My own view is that that's a benefit, not just in terms of capability and functionality, but also in terms of resilience. But I know you've been talking to those folks. When you think about this, tell me about how they're thinking about this from that perspective.
Well, it's interesting, Harry, right? I think with this topic and echoing a lot of Matthew's thoughts, right? This is in some ways we're putting cybersecurity at the same level that we do financial risk, right? We're putting a comprehensive framework into the market that requires that, and it hits your full technology supply chain. So one of the key factors in the regulatory requirements is around concentration risk, right? So, you can't put all your eggs in one vendor's basket. You can't put all your eggs in your own basket in some ways. And so, the model that we have of operating our own data centers, and then also partnering with folks like Microsoft and Amazon for our public cloud offering, right, provides us with a great deal of technology diversity. And the investments that we're all making there are significant. And I think everyone involved understands the rigor that's needed. They understand the level of partnership that's needed. And as I said before, they understand the transparency that's needed. And I think those are really the most fundamental things. And our competitive advantage, and look, I've lived this. I was a partner working with FIS where we were hosting our own solutions, and all of a sudden now we're hosting our solutions inside of FIS and offering them to the FIS customer base. The level of rigor that FIS comes at this is incredible, right? And so the first time you experience that, you realize how inadequate you were, right? And the things that you need to do to deliver commercial grade financial services. And we really excel at that. And we excel at bringing together the different partners that are required to do that, because we know we can't go at it alone. And I think with Microsoft and Amazon, we've got great partnerships. Their technology investment is significant, but again, they're giving you the tools and the control to use those tools, be it FIS or be it our customers. And so that responsibility is very shared. And I think our vision is very clear. I think our top-down requirements, to support this type of regulatory requirement are very strong. And I think that level of coordination is world-class. And I think that's what sets us apart, Harry.
I think about the cloud strategy, and resilience in the cloud actually opens up some challenges, but also some opportunity. I wonder if you have a view from those cloud providers as to how they're thinking about designing for resilience.
There's nothing new in what folks are doing, right? The same level of rigor has been there for a long time. I keep coming back to this, but it's the coordination of efforts, right? That's where the magic exists. Understanding those regulations, making sure that at each stage of the game you've done what's necessary, and that goes all the way back to procurement, right? How do you partner? What do your contracts say? What are your vendors' obligations to you? At what level are they committed to your business, right? Are they in this at the same level that you are? And then from there, how do you operate together, right? How do you come together, and how do you embrace each other at the right level of detail? Again, that right level of transparency, that's really important. And then how do you respond when something goes wrong? And I think the technology investments continue to give us more and more tools and services that allow us to do this more easily, more digitally, in more of an automated way. And that's very, very powerful. But fundamentally, you're still operating together.
Yeah, the contract comment is interesting because, Matt, when you think about the pivot to critical services, I don't see critical services in contracts, although it is a good heuristic. We see probably all the piece parts in the contractual structure. So when it does raise the question, when you're thinking about managing these relationships, have that holistic view of what needs to happen, and what are the right metrics to evaluate that it's happening. The testing is done, the incident reporting is in place. You hear about things in time, the right people know how to respond, and put that under that umbrella. I think that's a good heuristic to even think about the contractual relationships as well.
It goes back to Jonathan, that you're mentioning around kind of being a true partner with your clients on this, where you may not know if you're deemed part of that critical service as a third party. However, you should respond as if you are, right? That's where you have the trust that gets established. You have what the expectations would be if you are deemed critical, and you are prepared and open to be able to meet those. I think will go a long way as the firms are trying to understand what are their critical services and which third parties are part of that chain. John, you mentioned concentration risk earlier. I just wanted to make a point of that, because I think that was a really good one, because concentration risk is one that we are seeing across the industry a really big focus on truly understanding your concentration risk, whether it's based on likelihood, impact within a specific service, across an organization, as well as across the industry, because there are different ways to identify what that concentration risk might be. We've helped a number of firms in terms of identifying that concentration risk that they have through a framework that we utilize. So I think it's an important point.
And when we think about putting it back together, I mean, we want to think about not just what the regulation requires, but what they're trying to capture. Mm-hmm. The EU is trying to identify critical providers to defend against systemic collapse. But when we're providing services in the industry, we want to provide that value all the time. So the concepts apply at whatever scale, whether you're critical or not. And that's the value that builds the trust that, gets the customer to choose to work with you and continue to work with you and expand how they work with you. So this feels like right in the center of, and it goes back to where you started, Matt, the notion that this is a critical differentiator of value, not just a check the box or ward off this scary risk. The risks are real. The regulatory demands are significant, but the reason for management to focus on it is this is good business, and it adds value to the capabilities that you provide in other ways. Maybe I'll ask each of you to sort of sum up as we finish, like what should people be thinking about as they come out of this conversation, looking at this topic going forward?
To summarize a little bit of what we talked about so far is really when it comes to operational resilience and FIS's role, as well as your peers in the broader financial system, it's thinking about it as a true ecosystem. As a third party to financial services firms, fintechs, cloud providers, other service providers of all kinds have an opportunity to be a true partner to their clients, not only enabling regulatory compliance, but truly increasing the resiliency of you as a third party, as well as a resiliency to the end service and the end customer at the end of the day. It'll be interesting to see, regardless of the applicability of the regulatory onset of DORA and others, which firms take on the enhanced resiliency capabilities and truly have this be their competitive advantage in the market for their customers.
I just close by saying I think this is not new to us at FIS, right? The regulations are new, but this rigor and this level of partnership and interaction is fundamental to who we are. And we carefully pick the folks that we work with. We carefully manage our relationships with them. We have intense relationships with our customers. We understand what they expect from us, and we hold ourselves to very high standards. And I think, this type of regulation as it comes through and you have that type of baseline, it just allows you to elevate your operations, right? It takes you to another level. And I think in large part, you're going to see in the marketplace differentiation through these regulations. You're going to see folks who see this as an opportunity to create a further competitive advantage and to extend their leadership position. And you're going to see other folks that are challenged by it. Right. And I think that separation is going to come through this, and I think we're in a really strong position to extend our leadership position. And, it's not something that we're intimidated by, but it's something we're concerned about. Right. These regulations matter. We want to get them right. We want to get them right in the EU. We want to make sure that we extend that into the other markets that we serve, because these are good fundamentals, right, regardless of where the regulations are coming from. But again, back to that piece, we feel really well positioned. And that we're in a strong leadership position to drive the industry forward with us.
Thanks, John, and thank you both. I mean, from my perspective, I think this is really what we want to do. We are proactive about these kinds of things. We start from a good position, but there are some specific concepts and requirements here that are worth looking at closely, and we're taking that seriously. So we want to be proactive and be the ones who differentiate ourselves from the field. Appreciate your time, Matt and John, and thanks everyone for taking the time to listen to this.